The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start out the show like we always do, looking at the German DAX. And as you can see, after we made that ABCD pattern there the other day, just a few days ago on Friday, we've had one heck of a rally. We're almost to the top end of that range that we were looking at, 12,300, 12,500. We'll see what's going to happen at that point. By the way, at the first break today, we're going to have Bill Meridian. He's going to be on most of the show today because he's got so many wonderful charts to show us, and I wanted to give him as much time as possible to go through the material. Also, I wanted to also share with you the fact yesterday I had Mark Leibowitz on, and you'll notice that he was one of the top 5 gold timers. But if you look down in the top 5, Mr. Tom O'Brien. I'm trying to get this guy on the show, this Tom O'Brien fellow, but his schedule is just too busy, and it looks like I'm not going to be able to get him on the show here. But the fact that he made it into the top 5 is really a good sign. There's a lot of people that don't even get close to the top 10 in their whole lifetime, and that's really a big feather in his cap. Okay, let's move on to the first chart that we want to take a look at today, I believe, is Apple. And I wanted to show you this on the long-term chart because if you like 3 drive to a top patterns, you're going to see here that we hit the exact 1.618 in Apple yesterday at 162.24. We're trading at around 162.62 right now, but we did hit that spot on. Whether that means anything remains to be seen. All I'm doing is reporting the information as I see it. So that's what it looks like from my perspective here of what we're looking at. Now, yesterday, we were also watching the Dow Jones on the E-mini basis because we had a potential for a head and shoulders pattern, and this has gone up and taken out that high by just a fraction at that 22,000 and change level, 2240, I believe. So it still has not really taken it out, but it's really suspect whether that head and shoulders pattern, is going to have, any effect on the market at all. As we look at the overall market, if we look at the cash S&P as of what we had yesterday, hold on one second, and we'll get this up here so you can take a look at it. You'll see that we did go up, and we hit the 61% retracement on the cash S&P. We went above it, of course, in the futures. The futures has a 78% level at 24,000. That'll be soon, 24,000. 2,476 is the 78% retracement. But looking at just the overall market through the eyes of the New York Stock Exchange Index, you're going to see a totally different picture. This basically let you describe that these Dow stocks, the really heavy ones like Goldman Sachs and also Boeing Airlines and some of these really high-priced ones are moving the market. Those are the ones that are doing the same thing that they're doing, in the NASDAQ 100. It's the big stocks like Apple and Google and Facebook and all the others. So anyway, this is what we're watching here. It's been a little weaker market here, the New York Stock Exchange Index, and whether we're going to get turning down here the next day or so, sort of remains to be seen. Yes, the currencies are flat out really easy ones to trade, folks. They trade 24, 5 and a half. They trade 24 hours a day, 5.5 days a week, and they have some tremendous liquidity in there. So take a look at foreign exchange if you get a chance. Now, tomorrow we're going to have Norm Winsky. Going to have a shot of Winsky in the morning. That'll be at 9:30. And then on Friday, we're going to have Bill Koval of WDK Analytics on. He's got some long-term price patterns that he'd like to share with us, and I wanted to have him on the show because he does a lot of good research. Also, next week, we're going to have a new guest, Richard Stanton. He's a student from about 30 years ago and has his own website now, dealing in Forex, and I think that'll be an interesting one to look at. And then we're also should have Stan Harley back because we're in the middle of the month. I had tried to have him on in the middle of the month every month, and so we'll try to get Stan Harley on next week to take a look at what we're watching here. Now, we've had a pretty good move here in this Japanese yen that we were looking at just the other day. It's had a very, very nice move. In fact, we'll put this up and let you folks take a look at it. It's moved well over 240 pips just straight up in the last 3 days, and we're coming into this pretty strong resistance at this 110.90 to 111.10 level. Overnight high was at 110.91. We're trading at around 110.74 now, so it's still a bit early, but that's neither here nor there. That's what we're watching as we're looking at some of these things here early this morning. This will be a very, very key week, folks, as far as a closing basis, because if we close into new high ground in the Dow Jones Industrial Average and then also in the NASDAQ, then this analysis that I've been looking at is potentially is dead wrong. And this is what we're going to have to wait and see how the market ends up on Friday, and then of course what we start on Monday. And we know what Monday is, folks. Monday is the big solar eclipse going across the ecliptic of the United States. We won't see that again in several of my lifetimes, but it'll be very interesting. Monday's action should be, quite explosive with the new moon and the solar eclipse. I'm sure Bill Meridian will tell us a little bit more about that when he comes on in just about 4 minutes to give us some stuff. He's got some really great charts. I hope you all have a chance to, to listen to what he has to say today, because it's got some pretty good things to look at. We talked about cattle earlier in the week about getting down to that 106 level. We got to 106, went down to the 105.40, and boy, we turned like a bat out of heck, and the cattle closed really strong, almost limit up yesterday, above the near the 109 level. So that's a big move in cattle. However, we've had a pretty big breakdown in the bean market. Wheat did not do so much. It made a new low, but that's, we were expecting that down around that 457 level. But the soybeans, they really broke. Fortunately, the position we had we bought it right. Our stop was okay. Corn acted really nice. It just went below the 370 level for just a very, very short period of time, and now we're trading back into that area again. So with Mercury being retrograde on Monday, that should be a really positive thing for the grains, but they haven't turned as yet. So if they don't turn by today or tomorrow, this is going to be a failed pattern, and we could be looking at a whole lot lower prices in all of these grains. So we want to pay very particular attention to that. The Treasury bonds, Treasury notes, still heading lower in my opinion. That's what it looks like. How it's going to end up, we'll have to wait and see. But it'll be very, very interesting. We're coming up to a break here in just a few seconds, and stay tuned. We will have Bill Meridian of Cycles Research out of Vienna, Austria, as our guest, and he's got about 14, wonderful slides giving us some fabulous information. If you have questions for Bill, please give us a call at 877-927-6648. Stay tuned for Bill Meridian.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey, we're back, folks, and I believe we have Bill Meridian of Cycles Research as our guest today. Bill, are you there?
Yes, Larry.
Hey, thanks for joining us, my friend.
Sure.
I really appreciate it because you were on last month talking about the high coming in here. And I guess we'll start out with this monthly S&P chart that you have up here. Do you want to start with that one?
Well, yeah, back in January, I took a look at that long channel. I mean, you can get quite a bit, as you know, Larry, out of plain vanilla pattern recognition. And the S&P broke out of a major pattern at that time, as you can see. And if you just take the height of that rectangle and you extend it out, it goes to 2480. Mm-hmm. And we're just about 15 points under that right now, I think, this morning. And as you know, we'll look at the cycles, but the cycles started peaking in mid-July, and they continue peaking right through the end of August. So my forecast was for 2480 by July at the earliest and August by the latest. Mm-hmm. And in fact, that rectangle that you see, we could also bring in Richard Donchian's 4-week trading rule, but extend it out over the years. He said if a market doesn't make a new high or a new low, over 4 weeks you go in whatever direction the breakout occurs in. And as I've mentioned on your show before, PhDs in the Financial Analyst Journal, if you could believe this, actually wrote a fuzzy logic program to find out what technical patterns appear the most. And the answer was the rectangle, and they found out that the rectangular low was the single most profitable pattern. Mm-hmm. So this has actually been borne out by people who don't believe in any of this stuff.
I understand that.
So, I mean, as you can look, the stock, the S&P is overbought, and it's hit the objective. So now if we go down one to page 3.
You got it. I'll put it up right now. There we go.
That's I call it a tale of 5 cycles. There's the 1, 4, and 10-year cycle. The 1-year cycle is the annual cycle of the year. The 4-year is what they call the presidential cycle, even though the pattern exists in countries where they have 6-year elections, 8-year elections, or no elections whatsoever. And it started even before the Fed was instituted in 1913. And the 10-year cycle, which is the decennial pattern of Edgar Lawrence Smith. And Smith said years ending in 7 there's never been a year ending in a 7 when you haven't had at least a serious market correction or some form of a crisis. And we're in a year ending in a 7. And as we know from my study of the panic cycle, 30% of all panic months from 1600 up to the present occur in October and November of years ending in 7 or 8. And so number 3, there's the active cycles, which you get just by doing a spectral analysis. I run it through a couple more filters after that to try and knock out some of the less useful cycles. Then the 13-year cycle, and I have the annual tech cycle. Let's see, 13 years is if you knock 13 of, I think that's incorrect. I'm trying to remember what the 13-year cycle is at the moment. I wrote this last week. Well, the annual tech cycle, the tech stocks usually top around mid-August and bottom around mid-October, and they're 23% of the S&P right now in terms of market cap. And also, I think that should have been 30, but if we deduct 30 off of 2017, we come to the 1987 top, which was August 25th. So as I like to say, late August is very thin ice if you're a bull, and it doesn't take much to break that, to break the surface of the ice and go into the drink. And if we drop down to the next one, here is what I call the cycle schedule. July 15th, the years ending in 7 cycle peaked, so that's behind us. July 27, the sum of all active cycles has already peaked. August 15 is the tech sector cycle. August 16th, I think that's the most important one, the 1, 4, and 10-year cycle composite peaks. And August 26, a grouping of short-term cycles peaks. And actually, that August 26, that includes the, that's the Sun conjunct Mercury in Virgo. If you get one of those in this time period, it usually will break the market down. So here we see the first cycle now is on the next page, which is page 5.
There we go.
And that's the 1, 4, and a 10-year cycle. If you go down one more, I blew this up so you can see it a little better. There's August 16th. That's
okay,
the peak
just
in
take
that
me a
cycle.
second to get this up. Those spot on then. Well, that's almost like today, August 16th.
Oh, it is. Yeah, I forgot. It is August 15th. And if we go down one more to the green cycle, this is all years ending in 7. But again, I expanded this a little. No, I didn't expand this a little bit. But anyway, that is July 15th or so when that cycle peaked. And you notice that in years ending in 7, the declines tend to be pretty steep in terms of magnitude. And then we go down one more. This is already passed. This is a spectral analysis of all currently active cycles on a weekly basis. And it already peaked in late July and is coming down already. And so if we go down one more to 9, I say this cycle could be the icebreaker. Sun conjunct Mercury in Virgo. And here I've taken its historical behavior and superimposed it on this year. It hasn't occurred yet, obviously. But it's up 66% of the time into that date and down 58% of the time after that date. And the date is August 26th.
Yeah, this is what Bradley did a little bit of that, and it's also Sun conjunct Mercury was a thing that it was called combust. Do you remember what was that Indian astrologer's name? I can't remember offhand. Bathy started with a B, I guess. Anyway, he talked about that as being combust, Sun conjunct Mercury, and that has been a very strong trend and change, a change in trend for stocks. I've looked at that over 40 years, and it's certainly better than 70%.
Okay, so what are we waiting for? We're waiting for the market to give us a technical signal.
Yeah,
and
maybe they're not reading our stuff.
Yeah, here's a page 10.
Yep, 1 second here. We'll get that up here. This is the hook signal that you'd like to discuss.
Yeah, well, the S&P went to a new high last week, but closed below. In fact, it closed at the lowest level in about four or five previous weeks. And so now the NASDAQ did this at its first peak. Was it back in June? And then it erased that by going to a new high, and then it gave a second one. And so let me just add in a few things that are not so there's just data coming in every day, but there have been a number of Hindenburg omen sell signals. And for those of you out there who are not familiar with this, this is a dispersion index. And as far as I know, the concept was developed by Norman Fosback in his book Stock Market Logic back in '74. And that is, if you get a lot of new highs and new lows at the same time, it means there's uncertainty in the market. And that's known as a dispersion index. It has been refined recently and renamed either the Hindenburg omen or the Titanic syndrome, in which they've refined it a bit. And we have, in fact, had one, and we've had 8 in 30 days. And according to Jason Gopfert over at Sentiment Trader, if you get 8 of these in a 30-day period, it's serious, and we've already had 8.
Wow.
And here's the music.
Yeah, we're going to pay a few bills. I want to go back through this one more time.
We'll make some money,
when we come back. Yeah, please do. Bill Meridian, Cycles Research. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Bill Meridian, Cycles Research, Vienna, Austria. Bill, I noticed yesterday that Vienna was the number 2 city in the world to live in. I thought that was a pretty good thing to think about. I think number 1 was Vancouver, and you were number 2. So congratulations.
They always run 1 and 2, 1, 2, or 3. Vancouver, it just depends who's ahead of who.
Oh my goodness, I wasn't even aware of that. Bill, talk to us a little bit. talk to a little bit about that Hindenburg signal again. I've heard about it and stuff, but could you give the folks a little?
Well, they're all based on one principle. If you have a number of stocks making new highs day after day, and suddenly you got a number of stocks making new lows, Fosback quantified that, and they called it a dispersion index. Since then, it's been greatly refined, or if you just Google it, you can get the exact formula. But there were one of them generally doesn't do it. What happens is you get one, the market sells off 1%, and it regains that pretty quickly. But sentiment trader Jason Gopfert traced it back and said if you get 8 in 30 days, which the S&P has already done, that becomes more serious because his back testing indicates declines do follow. And in addition to that, I believe the NASDAQ gave 5 of these signals last week. And so the internals of the market are not very healthy according to that dispersion index. Mm-hmm. Also, I took the S&P, and if you divide it by the VIX, what it's telling you, or even if you divide the PE ratio by the VIX, of course, is a measure of volatility. And a low VIX, low volatility, tells me people are very comfortable. And if you divide that by either the S&P or the PE of the S&P, it's the highest it's been in, I think, 30-something years, which is telling you that people are extremely comfortable with their stock holdings despite the high valuation, which is usually an invitation to trouble. And then the president, of course, tweeted out the stock market is at a new high, and that's the type of sentiment you start seeing around highs. Mm-hmm. And so, the way I'm reading it, the market would have to break substantially back through 2480 and keep going, and then you would take that vertical distance in that rectangle and multiply it by 1.236, 1.382, 1.5 to get higher objectives. But with the cycles turning down and looking at the technical condition of the market, I don't see how that could happen. The one problem with all of this is probably the best indicator, as late George Lindsay used to tell us, is the advanced decline line. The advanced decline lines generally have been hitting new highs, and general rule of thumb is that if it's hitting new highs, then the high is out 3 to 4 months in the future. And I agree with my old friend Walter Murphy reading his latest report. He said either the top of the market is out 3 to 4 months, or you're going to have a correction sooner, which is what both he and I think, but it's going to be limited in scope to maybe 8 to 10%. Mm-hmm. So that's what I think. That's how I resolve that, because as you keep following, if the AD line keeps going higher and higher, you tack 3 months on to this month, you're talking about November. And the Q4 of the year is historically the best.
Mm-hmm. Okay, so that makes good sense. That answers a question that I wanted to answer. The next thing we're going to talk about is the oil market. We have one of our listeners was what your feeling on oil was. You want to go start with chart 11?
Yes. Well, if you just look at the technical chart, plain vanilla technical analysis 101, you've got a clearly defined downtrend line, and you've got a rally that stopped just short of it. And if you look, I think that was right around August 1st when you got another hook sell signal. It approached that line, didn't even get close to it, and immediately declined. Mm-hmm. So that's number one. Number two, if you go to the next one. Okay. Now let me explain oil price behavior by month. What this is the percentage. It's the expected return. It is the percentage of time that oil has been up in a month, like 60%, 50%, times the price change, which in other words, it either gained 2%, so 0.6 times 2% is 1.2. And as you can see, so it combines the probability it will be up with the magnitude of the move. So if you look to the left, you can see January is a weak month, February. You notice that's a very good, well, the two highs are March and April. Then you go into a quiet period. Then August, in the second half of the year, August is the best month. And then you'll note there's usually a low in October, November, and you don't get another high up until March or April. So let me just explain that I did a study. If you can get a lot of information from, what do you call this, contra testing, but if the oil market is not up in March or is not up in April, what has happened historically? Well, if it's not up in April, you can see you've got weak months following. But look, if it's not up in August, look what follows it, October and November. And I did a study which showed the following, and this I call distribution analysis, that 75% of the time, if the market does not rise in the month of August, the low is either going to be in January or December. That's distribution, just looking at where the next meaningful low comes in. And about only 10% of the lows fell between August and December, and then the rest of the lows were out beyond the following December, January, which means it's the strongest sell signal seasonally if August does not close the month on the upside. So here we are in August, and we're halfway through, and oil is up against a retracement line that it can't break. So here's where we dial up what I call the microscope approach from the telescope approach. If you go to the next page.
Okay.
Price has fallen from the 1st through the 11th of August. And it turns out this is apparently a key to what happens in the rest of August. If you look at the top table, if the period closed on the downside, August 1 through August 11 from 1983 to the present, you'll notice 1 week later, 2 weeks later, up to 6 weeks later, the oil market has tended to be down. And if you just take 2 weeks later, it's been down twice as much as it's been up. But if that period closes on the upside, it's been up 2 to 3 times as frequently as it has been down. So it's already locked in. So right now, I think the odds are about 60% that oil is going to close the month lower. And if it does, it will trigger that sell signal. And I think I've got this on the next page.
Okay.
Here, I got ahead of myself. If
That's
oil
okay.
closes on the downside in August, this has been very bearish in the past. About 75% of the time, oil does not bottom until December or January. About 10 to 15% of the time, oil does not bottom until late in the next year. Rarely does it ever bottom before December. So this is a great sell signal if it manifests, and I think it will, because the technical condition of the market is not very good right now. And we've got this key of the month of August, if you want to call it that. And there may be other ones, and it may be the 90 days before. 90 days frequently works pretty well.
Bill, we have a question here. We've got another break to pay some bills here, but we've had 3 questions while we were before the show started to talk about gold, and I believe we're going to talk about that next. Is that what the plan is?
Yeah.
Okay, we certainly want to do that. And then after we finish with the gold, I do want to give you some time at the end of the show to let the folks know how they can reach you, and because the stuff that you have is really great, and we really, really appreciate you being on, because we know what you go through to give us the time that we need here. So I just wanted to thank you ahead of time that we really appreciate. So we'll pay these bills, and we'll be right back with Bill Meridian of Cycles Research.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Bill Meridian of Cycles Research. Bill, we're going to switch over to the gold market. And we want to, the first question we've had from two different listeners, are you still bearish long-term on gold?
Yes, I am, but I'm bullish short-term.
Yeah, well, I knew that, yes, but they were asking about long-term, and I think they were talking about months. And so why don't you go ahead and go through the gold, and that'll probably answer all their questions. Okay, well, the 7th was a projected turning point, and we indeed got a low. Now, bullion rose by 2.4% into the 11th. It's nearing, well, I wrote this last week. It hit the 1294 resistance, and it has declined. So there's a projected turning point on the 17th, which is tomorrow. So this short-term decline, I expected this short-term decline. I did not sell any gold holdings. I'm expecting it to begin rallying again tomorrow and break through that 1294 area. So the reasons, the monthly cycle bottoms at this time, as does the annual cycle. The low in any year is usually around August 6th or 8th. It's also the low for the month of August. Price has risen in August 59% of the time, with the third highest magnitude, plus 3.03% of all the 12 months. 3, if the longer cycle is rising in a strong month, then we can usually add 10% at least to the likelihood of a higher month. So it is rising. So you can take that annual cycle, 59%, and increase it by about 10% up to 65%. And September has been the strongest month in any year. The next meaningful seasonal down period is the second half of October. So well, that's how gold looks. Okay, the question that someone's asking, do you do the same type of analysis on silver, or is it a lot less liquid than the gold? Well, it's too volatile, less liquid, and a real nuisance. It's like trying to forecast natural gas, which is another very tough one. Yeah, that is the understatement of the year. That's for sure. Now, the next one we wanted to talk about, by the way, we've had several people in the room today thanking you, for the things that you brought to us, way back in May and June about the market topping around this type of the year. And you also had some comments about the president that we want to cover a little bit later. But let's go to the Treasury bond market and take a look at that and give us an idea of what you're looking at here for interest rates. Well, August has been one of the strongest months, up 71% of the time since '82. But August has a much greater chance of closing on the upside if it's been up in the prior month. And this is the August, if bonds, this is the 10-year note, are up in the month of July, then 1 month later, which is August, they're up 18 out of 21 times. 2 months later, 14 out of 21 times. So again, this the application of quantitative analysis is very helpful. So right now you're in that 1 month later phase until the end of the month, which is 18 out of 21 times it's been higher. I think the upside is somewhat limited, but it should close the month on the upside. So you still think interest rates are going to be going lower?
Over the short term, yes, but over the longer
Okay.
term, I think they're going up. And
Okay.
this goes all the way back to my business activity index, which I should have relied on more. I might have been on the cover of Newsweek or something, but
You don't want to get on
the
that cover.
the cycle was flat until 2017. So I thought from this, well, if the presidential candidate who's got the best economic plan is the one who's going to get elected, and the result will be a boom in the economy. And for that reason, I first gave the nod to Trump before I even looked at his horoscope. And now we see, just this morning, the price of zinc is following iron and the other metals up because the president just ordered by executive order a review of all the projects, infrastructure, bridges, roads, what's slowing everything down. You know, why aren't these things being repaired? And suddenly the metal prices are jumping. And I think the reason the banks stocks have been so strong since July of 2016 is because none of the analysts factored in increased loan demand because they think the economy is going to stay flat. So interest rates, I doubt, are going to stay low. So I think the high was last summer, and Alan Shaw up at Smith Barney in the old technical war room used to say the longest cycle he could find in Sidney Homer's history of interest rates was 35 years. The low was in 1981, add 35, and you get 2016. And thus far, that's been the high.
That's for sure. This next chart, I'm almost afraid to put up, and this is the upturn in the war cycle. This is, you want to go through this?
Yeah, this is Professor Raymond Wheeler, the University of Kansas back in the 50s. He lassoed all of his students and got them to put together his war index. They assigned a value. Little wars were a 1, middle wars a 2, and big wars a 3. And this included the amount of collateral damage, the number of soldiers participating as a percentage of the population. It was a fairly rigorous formula. And they ran this all the way back to BC times. And our old friend Richard Mogi updated it through a mathematician he hired through 1990. It has not been updated since. And the most dominant cycle is 18 years. And I said way back at the peak in 07, 08, aided by information I was getting directly from the battlefield, that the enemy was collapsing. So the peak in the war cycle, once they collapse, unfortunately what happens is that the winners tend to sit around and do very little. The losers learn the most from the previous war. And so the military has been allowed to run down. This means the bad guys in the world get very aggressive. So we can see the cycle bottomed last year, and it's turning up. And so you see what's happening since then. So this is... Yes.
One of the things I wanted to mention to the folks here, Bill, do you still do, you're a scholar of wars through the years and battles, and you used to build these software programs for these games. Do you still do that?
No, very unfortunately, QQP, Quantum Quality Productions, was sold in 1995 over my strenuous objections because I saw online gaming coming, internet gaming, and the guys who are the other shareholders did not see that. And so I would love to be doing that, but I'm not.
Yeah. Well, I know you studied the history a great deal, which is, really cool. I appreciate that very much. Now, let's talk about put a little feather in your cap here, because here again, you're one of the top timers for the year in several categories, but this one, is the really big one, and I think you should be very happy about that. We also have Tom McClellan we've had on the show before, and Stan Harley's been on the show, so you're number one. I appreciate you being here.
Well, Tom is right now number one for 2017 thus far.
Oh, okay.
As of the last week.
Okay. Well,
and I just wanted to go back. Remember, we talked about the eclipse path cutting across America, and I said there'd probably be violence, and here we are.
Oh my gosh, we wanted to talk about that. Go ahead. Oh, we got another break here. Would you be able to stay with us for just a little bit longer and talk about what's going on with this eclipse? Because everybody has a strong interest, because it's next Monday, which is just a few days away.
Yes.
We'll be right back, folks. Bill Meridian, Cycles Research, Vienna, Austria. Must have done something wrong. Uh-oh.
What happened to the music?
I don't know. Someone's asking a question. Where did you work early in your career? Do you remember? Of course you remember, but could you repeat it? Someone's asked a question about that. How'd you get started in stocks and stuff? Oh, there's the music.
Well, here comes the music.
I'm sorry. Yeah, that's a my bad. I'll get the bad sign here in a second. Bill Meridian will be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, with Bill Meridian. Yeah. Bill, do you want to tell us about this eclipse and what's going on with it coming in here this coming Monday?
Yeah, but you wanted to know where I worked?
Oh, that was the first question. Yeah, well, I already knew that. Somebody has to go ahead and tell them your background. That's important.
I got my BS and MBA at NYU, got out in 72, did fundamental research for the life insurance industry. That was a great job. I love those guys. And they moved down to Atlanta, Georgia. They wanted me to go. I wouldn't move. And in 77 to 80, I was with the Value Line. Then I either wrote Indicator Digest or I was an institutional broker with Smilin and Safi and up till 85. And then I was one of the 2 technicians with Payne Weber with Jim McCarthy. Then I got laid off, started Cycles Research, and then the Arabs hired me and I went to Abu Dhabi.
Yep, I remember that.
That's the story. And anyway, the eclipse. Well, as you know, the eclipse cut the United States in half. And curiously enough, I've written, I still can't believe this, I've written that the eclipse, when an eclipse cuts a country in half, it's usually civil disturbances. And Mao Zedong, he came, he fomented civil war. His natal eclipse path cut China in half. Alexander the Great, his cut Greece in half, and his father came to power by civil war. And I remarked that the eclipse paths of Civil War figures like Robert E. Lee and Harriet Beecher Stowe looked the same as this one, so I was sure it'd be civil disturbances. And here they are hauling down statues of Robert E. Lee. And
Yep,
this
I saw that,
shadow
yeah.
of this eclipse is the same as the one when he was born. How eerie is that? But anyway, eclipses work in pairs. This one is 29 Leo. The next one in February is 27 Aquarius. They are approximately opposite, which means they'll now work as a pair. So as soon as this one sort of flames out or cools off in the autumn months, it'll start heating up again as the other one approaches. So this is going to continue right now. We'll be talking about this 1 year from now. And this eclipse is conjunct President Trump's Mars. It is also conjunct, yes?
Yep, that's it. Hey, thanks, buddy. We'll have you on again soon, my friend.
I've got an eclipse analysis. If everybody wants it, send me a note at bill@cyclesresearch.com.
God bless you, Bill. Talk to you later, my friend. Travel safe. Bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.